Earnings season, though, around the corner. To talk about the outlook, I'm joined by Caleb Silver, Editor-in-Chief of Investopedia. Caleb, it is always great having you on and hearing your perspective. You have so much wisdom when it comes to all of the things that matter in the markets. Let's talk about the setup for earnings season. This next earnings season coming up, really, we kick off this Friday. What's the expectation?
Yeah, I got 3 words for you. Curb your enthusiasm, okay? Year-over-year estimates. This is according to FactSet. 11.9% earnings growth year over year for the S&P 500. That sounds fantastic, except that was revised lower from 14.5% at the end of the last quarter. We've seen a lot of downward revisions. Now, 11.9, 12% earnings growth, fantastic. Take it any day of the week, except in the environment that we've gotten used to over the past couple of years with some of these mega cap companies just crushing it on the earnings front. 8 out of 11 sectors have revised lower. Sectors revise lower all the time. This is the little game we play.
It gives us a new hurdle to clear.
But that's a lot. And this 71 companies actually have issued negative guidance so far. We're about to get into earnings season in the next couple of days. Only 35 companies issuing positive guidance. But when you look at a market that's kind of expensive still, even with this sell-off here, and you look at this downward revision, you got to wonder if investors are just not going to be impressed no matter how good the earnings are compared to estimates.
And especially when you think about, it feels like the tide might be turning a bit when it comes to sentiment. We had a guest on earlier, you know him, Jay Woods, who was predicting, yes, he is the best, predicting that basically we're due for a correction, and you know, it may kind of be a garden variety correction. Where does it seem like sentiment is, especially when you consider you all have from Investopedia just some you know, interesting perspective from your user base?
Yeah, so we ask our users, our readers all the time, are you bullish, are you bearish, what are you buying, what are you optimistic about? The latest sentiment survey we did at the end of last year, they were pretty optimistic because they were coming off of 2 back-to-back great years for the stock market and some of the biggest stocks in there, which are their favorite stocks. We've seen that pull back a little bit, and now you see our readers looking for ways to protect gains, looking for ways to potentially ride out a correction if we have one, looking to see if it's still okay or the smart play to lock in a CD at a 4% rate right now or a high yield savings account. So a little bit of caution, but our readers are self-directed investors that like to buy stocks. If they're looking for any dip opportunities, and look, we've had dip opportunities that have come throughout in the last 12 months. Guess what? Every one of them has been bought. We didn't have a 10% correction last year. We still have a stock market that is above its 200-day moving average. So the trend is still good, even though we're getting a pullback here. But since the election, and we had that post-election euphoria, stock market's only up about 1%. So it looks like we have come down. Jay's probably right. There's probably a few more percentage points on the downside.
Yeah, that makes sense. And then how do you anticipate the leadership, or what's your read-through on, you know, what investors are paying attention to, especially when you think about the Mag 7 and the NVIDIAs of the world?
Yeah, well, NVIDIA's gotten us used to doubling or tripling its profits and its revenue growth year after year. And it kind of guided a little bit lower, if that's even possible, as of its last earnings report. That's one of the notable companies that has done it. So is First Solar, so is Apple, so is Exxon, so is US Steel. So if you look across the sectors, there's a little bit more weakness or just not as much strength as there used to be. Fourth quarter of the last year is supposed to be good for retailers, good for consumer discretionary stocks. Apple was already guiding lower on the December sale, so we know what to expect there. But the sectors that are guiding lower the most, IT, consumer discretionary, thank you, Apple, industrials. This is the largest quarterly increase of sort of issuing negative guidance relative to the 5-year average. Who's guiding up? Financials, communication services, technology outside of those companies, and utilities. Utilities should benefit in a time like this.
It does make sense that financials are guiding higher, especially in the context of the incoming administration, the pro-growth environment that we're expecting,
lower rates,
regulation, lower rates. That's helpful to the financials. When you think about, I want to just quickly, I know you've been doing some kind of checks on CES and the activity that's come out there. What stands out to you, whether it's NVIDIA or any other big innovations that we've heard?
Yeah, it's tough to get past the headlines from Jensen Huang, the CEO of NVIDIA, who was kind of downplaying the role of quantum AI, saying it may take a little bit longer. We've seen what that's done to quantum AI stocks. But their Cosmos platform that NVIDIA rolled out, pretty big deal. It's got the AI-generated real-world scenarios for robots and AVs. What could go wrong, Diane, when robots and AVs are kind of on their own. Segway's robotic lawnmower, that's going to take some summer jobs away. Atmos has these cool electric skates. They go 18 miles an hour with a 16-mile range. That sounds terrifying when you think about all the scooter and bike traffic we have here. And active Amazon.
Skateboard traffic.
Yeah, but I'm organic. Amazon is out with its Fit 2 watch. This is AI assisted as well. So you see Amazon taking steps into the AI world. AI is everything out there in Las Vegas right now. I have a few colleagues out there, and that's pretty much the theme. But you're seeing a lot of cool gadgetry, some of it AI enabled, some of it just better gadgetry to make our lives supposed to be a little bit better.
For those of you who don't know, Caleb is a big skateboarder, so that's what the skateboard reference is. There's one sitting near us. Really quickly, I want to get your take on, especially what your reader view seems to be or interest seems to be in terms of crypto, especially when you have the administration that seems to be, kind of friendlier to that.
Yeah, price drives interest, so interest in Bitcoin, interest in crypto, basically at an all-time high. We've seen periods like this before over the last few years, but that $100,000 threshold, that got people's attention. Remember, it's about a year in since we got the spot Bitcoin ETFs. More adoption by our readers went from about 8% to about 20%, or interest in adoption. And we still haven't seen this rolled out on an institutional level yet. We haven't heard from the new crypto czar. We will in the next few weeks. That should be exciting. So interest around the space is super high right now. But our readers, and I think a lot of individual investors that have experimented with crypto, are looking for other ways to attach themselves to the market, whether they're buying the cryptocurrency itself, or whether they're buying the Bitcoin ETFs, or buying still the picks and shovels of the companies building the blockchain. Lots of interest around those stocks right now. Of course, MicroStrategy was the big stock last year. That's fallen off a little bit with price, but I think interest is there, and I think it's going to stay and grow.
But MicroStrategy is essentially like kind
of
a
Bitcoin treasury.
Yeah, exactly, exactly. Any other trends that you're noticing when it comes to what your reader interest is? Is there a trend where they're kind of paying more attention to bonds and fixed income now, as you mentioned earlier?
Yeah.
Is it worth it to invest in CDs?
Yeah, I mean, we came out with our terms of the year for 2024, and the top two were inflation and tariffs. 2024, last year.
2024,
yeah.
Okay.
So, but inflation and tariffs were the top two terms. Tariffs are on people's minds just because we don't know, is it more bark than bite coming from the Trump administration? He could roll those out the day he gets into office.
Right.
What would that mean to inflation? What does it mean to valuation? What does it mean to where we are in terms of the economic growth picture? So a lot of people are concerned about that, but we always see this too, and there's a little bit of skittishness in the economy. People retreat and start thinking about their personal finances a little bit less than they think about their portfolio allocation, because they don't change it that much. Individual investors like us, we just keep buying every 2 weeks, and it's hard for us to make changes, so we worry about what we can do to protect the house, and then we start thinking about how to keep building that portfolio, make it a little bit stronger for the new year.
But I think one of the things that you just said matches up with what we're seeing in terms of the price action early on this year in the market. It feels like the market's kind of muddling through and trying to figure out what is the incoming administration's first act going to be. Is it these tariffs? Are they going to be inflationary? And especially, with how the latest economic data is coming in and how the fixed income market is reading that, and that's now sending some headwinds to this market. It's like, it just feels like they're kind of searching in the dark right now.
Right, the equity risk premium, that's top of mind for everybody, because as we see these bond yields rise, you really have to ask yourself as an investor, what's the best place for my money right now and the rest of this year? People are tackling that question on their own, but I think a lot of people are still devoted to stocks, especially the top 20 that they love and hold so dearly, and for the last few years have delivered great returns.
All right, we will leave it there. That's Caleb Silver, Editor-in-Chief Investopedia. Always great to hear from you, Caleb.